I want to just ask one quick question on tax, actually. And that was, I've had this question before. It is, so your capital gains tax within a tax-free investment is obviously you don't pay it, but on death. So when we die, all our assets are deemed as sold and we pay capital gains tax on them. What happens to our tax-free investment?
So that's a good question. So you're right, on death, that's also a tax event. SARS is not missing out on an opportunity on tax. On death, it's a deemed CGT event, and therefore assets that the deceased within the deceased estate is liable for capital gains tax. A tax-free investment, however, is exempt. Okay, so it is exempt for CGT. However, it does form part of your deceased estate, and therefore it's dutiable in terms of your deceased estate. I think there's that sort of misconception that with the retirement funds and an RA, that is also exempt from estate duty. Okay, whereas TFI does form part of your estate, and there is therefore estate duty payable on it.
Because that is one of the advantages, of course, of an RA is it doesn't form part of your estate. It's actually taxed differently. There's different tax tables. So there's a lot of moving parts there, but I think it is interesting to know that if you have a lump sum that you've saved up as a tax-free investment, SARS doesn't get it on your death, which is quite a nice one to know.